On this week's episode of the Crushing Debt Podcast, money stress and triggers. So welcome back to this week's episode of the Crushing Debt Podcast. My name is Shawn Yesner, owner, founder of Yesner Law. Welcome back, your financial coach, George Corbello. How you doing, George?
I'm just making sure that the mic is on so there's no stress here on this, but you know.
Yeah, the last thing we need is
Can't hear you. What? No, man, how you doing? I'm doing well. I'm excited. I guess it's a payday, so if it's a payday in your day and your congratulations, it's a payday. So it's always nice to have some money in the bank.
You know, it's weird. I made my kids' allowance payday every other Monday.
Okay.
And I don't know why I did that. I probably should have done every other Friday.
Usually it's Fridays and stuff, but hey, Mondays is, people get paid on Wednesdays too. It's,
I get paid, so I set myself up at the law firm. I get paid the 28th of every month.
Okay.
I get once a month.
So you're a once a month.
I'm a once a month.
That's a tough one.
I probably could cut it up into two, but I don't know. It's easier to do. And I actually pay my employees twice a month.
Okay.
I pay them on the 15th and at the end of the month, because for me as a business owner, to pay every other week, I know that it spreads it out, makes 26 payments a year.
Yeah.
But those 2 months that you got to come up with 3 payrolls, we're going to talk about money stressors. Coming up with payroll was probably number one on that list.
It's like, hey, once a month is a great way to do things, but
right.
Most employees might beg to differ. But yeah, I whatever makes it easy.
They get used to it. They actually get used to it. They get paid the middle of the month and the end of the month. There you go. And there you go.
And no stresses in this office. That's for sure.
Yeah, there's absolutely no stress in a law office. None whatsoever. So what are we talking about this week?
Well, I mean, I think a few examples. For me, I've been talking with clients. It's really understanding those stress that we have we're stressed out. There's a lot of people that are stressed out. I mean, unfortunately I go into Reels and TikToks and Instagrams, and everyone's stressed about money. It's rising costs is still there. People not making enough money. Inflation,
not keeping up.
Yeah. There's so that everybody has a different perspective on what's causing the stress itself. We kind of know what some of those obvious stresses are. It's like, everything, the prices are all up, right? But what does the impact of that stress have on you? What are those money stress? Because some of us is not just the can I pay for daycare kind of thing as well. Some of us are still in that mode of, like, again, living paycheck to paycheck, where it's like, oh my God, just the thought of a bill, the thought of, you got to pay the mortgage at the beginning of the month. That thought triggers the stress. And again, there's signs that you have when it comes to that stress. We get sweaty and we start to
can't sleep.
You can't sleep. You
can't eat.
Can't eat. Oh, I mean, I can eat. I don't care how stressed. I stress. I probably eat more.
Right.
So that's my fitness coach will probably have something to say about that. So he's like, make sure you meditate before you go have that dinner.
But, one of the interesting things I've learned is the importance of having a budget to try to diffuse some of that stress. For example, I looked this month in February. I actually had brought home some extra money at the end of January. The law firm had a decent month. I brought home a little bit of extra money. And by the end of February, it was gone. And I was like, what the? But what I realized is I had a major plumbing repair at the house.
Okay.
That was a 4-figure plumbing repair.
Oops, sorry.
And because I had brought home extra money, I intentionally budgeted. We're going to talk about some of the ways to relieve the stress. I had financed the purchase of a dining room table. I've talked about it on other episodes. And so when I brought home the extra money, I used some of that extra money to pay off the table,
right?
Rather than continuing to pay the minimum payments until I paid it off. I was just like, forget it. Yeah. I got some extra money. I'll pay it off. And so what I realized was that was actually a couple of grand that will not normally come out of my budget,
right?
And that made me feel better.
And that's the thing. Obviously, dealing with that stress. How do we manage and cope with those stress? But that, again, just identifying that. I mean, sometimes we just like, I can't sleep. Well, there's stress in life. When we talk about it with money, it's more of just like, okay, how are we going to make ends meet? How am I going to pay for certain things? But there's just the thought of something that it's related to money. And that's kind of scary because, like, all we do is work, right? We're in this mode of, like, we work, we pay the bills, and then we die. Right. Great way to live. It's like we don't want to live that way.
No.
And the problem we run into is that stress how is it really impacting our ability? I'd imagine if we're so stressed out in regards to just the debt or the bill. Let me tell you, there's stress about just talking about a budget. Some people will go, wow, budget? Oh, and they start sweating. They're like, oh my God, that means I'm restricted. That means I can't do things. That means I can't manage stuff or I can't have fun. And it's really more how we interpret those stresses that are going to impact our ability to actually do something or manage life, or just that beautiful thing that's, our daily life that's joyful. We have all this doom and gloom that we keep kind of stressing about, and we go like, how do we manage that?
And that's where, the catchphrase of the show is more money at the end of the month rather than month at the end of the money. And honestly, I can't remember. I don't believe that I created it. I'll take credit for it, but I don't believe that I created it. I thought maybe I read it somewhere.
Right.
Maybe it was something that I just thought of as I was writing one of the books. But that's really where it comes from, is that when you finally do get all your bills paid, and I've been guilty of it from time to time. I don't want to deal with paying bills, and so I wait until the 12th or 13th, and I'm like, well, shoot, now the one that was due on the 13th is going to be a day late. But that's where a lot of that saying comes from, is you're so afraid of paying your monthly bills, so you delay doing it.
Correct.
And then once you do it, are you afraid of paying your monthly bills because you look and you go, shoot, well, I can make it through, the first couple of days of the month, but once I get into week 2 or 3 or 4, how am I going to buy groceries?
Yep. And you touch up on a good point. You're thinking like, how can you be afraid of like paying bills, right? But if you're behind, or if you're having issues, paying or getting the income that's necessary for that, there's shame and guilt that might be tied to it, and that's where it becomes this stressor of like, well, if I have to talk to that person I owe money to, or company that I owe money to, they're gonna look at me a different way. There's gonna be some type of we look at ourselves differently, as if, and that's where some of the stress. Again, a lot of our stresses are self-inflicted.
Yeah,
and we need to kind of understand what are some of those triggers so that we're not beating ourselves up, because that's not good either.
Because I will tell you, the people on the other end of the phone, the debt collectors on the other end of the phone, they don't care.
No,
their job is to collect the money, but they're not going to think any more or less of you if you can or cannot pay. They don't know you as George.
Yep.
They know you as loan number 1, 2, 3, 4, 5.
Correct.
And they don't care about George. They care about borrower number 1, 2, 3, 4, 5. And so I agree with you. A lot of it is self-inflicted. I'll give you another one now that we're recording on March 1, but this will be the first week of March, the episode for the first week of March. A week after this episode, let me see. Let me double check. So this episode will come out on the 7th. A week and a day later. Do you know what that is? March 15th. Do you know what is significant about March 15th as a business owner?
No, okay, tell me.
It's your tax deadline.
Oh, that's right.
Your business tax
got
deadline.
Nervous there again. You're right. That's something I did want to forget.
And then a month after that, April 15th.
It's the regular.
The regular
more
tax
deadlines.
So again.
Good point.
Again, what is it? Confession. I just sent my law firm financial statements to my CPA 2 days ago.
Okay.
So chances are there's an extension going to the IRS for the law firm.
Can I have a confession as well? I'm probably in the same boat. I was supposed to give them to them today, so I'm going to probably do that on Monday. Yeah, I get the feeling. I can tell the future. Yes. Right now, we're probably going to be filing extensions. So thank you, CPAs. That's why we work with them.
But see, even George and I get stressed about taxes and finance like everybody else. So it's not uncommon to feel this way.
I agree.
What are some other financial stressors?
For me, the obvious ones: your job loss. If some like life event changes are going to have stresses in our life,
right?
And how we deal with those situations. For me, some of the other triggers. For me, I'm thinking about that. Like for me, life changes, job loss. Some of the things. What are some of the things that you're thinking? I'm thinking like triggers that are. Identifying those triggers is probably important for us in the first step of kind of dealing with this.
Yeah, I mean, well, not to take it down a notch for a little bit, but the two that recently impacted me were healthcare loss or healthcare costs,
Right.
and then the loss of Melanie's income.
Right.
Those were two big ones. I am reminded of the joke that somebody stole my wife's credit card, and I didn't report it for 3 months. And they're like, "Well, why didn't you report it?" It's because the thief was spending less than my wife on the credit card.
Okay.
So, yeah. So, but
love it.
But no, two other stressors: healthcare costs. I mean, I just went through.
Good point.
We were covered under Melanie's healthcare insurance, and so now I had to get my own policy.
right.
I had to get my own policy for me. I had to get my own policy for the boys. Of course, the boys' policy and my policy don't cover dental or vision. And then as soon as my kids get their new insurance policy, my son starts complaining that his mouth hurts.
Of course.
I'm like, great. Now I got to buy dental insurance,
Come
and I got to
on,
get him
kids.
to the dentist.
Let's get the wrench.
I tried to sneak it in and call the doctor and be like, I don't think it's his teeth, but his mouth hurts. And they're like, if it's in his mouth, go see the dentist. I'm like, wah. So now I got to buy dental insurance to get my kids checked out. Plus, we all need to go to the dentist on a regular basis.
I mean, daily costs. I mean, I understand like some of the things, but just daily costs. We know that food prices are still high. Gas prices are still in a high level as well. Trying to make ends meet. The big thing too, like daycare. Again, we talked about families right before, like, hey, we're going to be living at home and how it manages those. But if we have two parents that are working income in a 2-income family, and you have kids, daycare is important. Yeah. How do we pay for daycare? Who are we sending the kids to? Who's, and those kind of, so that's another stressor that comes when it comes to our money.
We just went this last week in my neighborhood at the county recreational center. They had what they called a summer camp expo.
Okay.
And so there were 24 different summer camps, different types of summer camps. So my son likes going to the Rockatar Music Academy. Yep. So that's a 1-week camp. Bricks for Kids, which is basically Lego. They were there. There was a camp there about learning how to dive, a camp there about learning how to fish,
nice.
Camp there, basketball, soccer. My son's soccer league was there. And so I'm looking, and I remember growing up, my parents would send me to summer camp. I didn't go to overnight, but they dropped me off in the morning, they picked me up in the afternoon, and it was summer camp all month. It was Santra J Ranch. I still remember it to this day. And we look forward to going all the time. Now it seems to be more of these 1 week here, 1 week there.
1 week.
A couple days here, a few days there.
Yep.
And the problem is, I think the cheapest one was like $150 a week.
Yep, that's cheap.
You got to do 8 weeks of summer camps? 8 weeks at $130 a week is what, $1,000?
Yep, easily.
Times 2 kids. So we're talking about an extra $2,000.
Yep.
Just to send my kids to the cheapest summer camps. Now, one of those we got to talk about scheduling. One of those weeks will be at Disney. But other than that, Disney is another expense I got to figure out
Shawn,
this summer.
You're looking stressed right now.
I know.
Relax. It's all good.
I have no idea where all this money is going to come from to make it through the summer.
He's going to be working. That's what he's going to do.
Yes-ner law prices just went up.
So you talked about, again, life events, planning ahead, which is great. You're trying to plan ahead from a budget standpoint. Some people are still in that point where it's like life happens and all of a sudden there's the stress, that unexpected expense, the end of the month bills. Dude, that stresses many people out. Having that mortgage payment, worrying about that, the light bill and stuff like that.
I got our home insurance renewal.
Oh, that one scares me.
Now and I'm sure your mortgage payments are escrowed. My mortgage payments are escrowed. So I'm not going to have to cut a check for the new insurance. But this year's insurance is significantly more than last year's insurance. And so what that means is that the bank is going to have to pay more than they were anticipating to make, which means my mortgage payments are going up because they've got to increase the escrow to make up the difference.
Or the mortgage goes up.
Right. So I'm now anticipating an increase in my mortgage. Fun times.
Breathe, people, breathe.
Fun times.
One last stressor that, again, understanding your triggers. Guys, we're on the internet all the time. It is very easy to compare. It is very easy to go, oh, wow, they're doing really well. That stresses us out because we're like, are we doing as well as we should be doing?
Well, and remember, for the most part, people only post positive things on Facebook and social media.
Oh, that's true.
In terms of, And I know there's definitely trolls, there's definitely Karens, there's definitely all that on social media. But what I mean is all the people that post, we just got back from this cruise vacation, we just got back from this vacation, that vacation. I've heard story after story after story about social media about families that post, we just went on this great vacation, and then the next post on social media is, we're getting divorced. And you're like, well, wait a minute.
That is a huge 360.
Yeah, so keeping up with the Joneses in terms of you see all these people, like I said, we're going to Disney in July. We're next week is spring break. We're heading out of here for a week for spring break.
Nice.
But we only post on social media, for the most part, when things go well. It's,
Right.
I'm not posting on Facebook. I had a client complain to me yesterday.
Right.
I'm not going to post that on Facebook.
Well, I mean, you'll be surprised. There's a lot of that too.
There probably is.
We're all venting and using it differently, but I agree. I think let's understanding those triggers is part of really, again, the first step
Right.
towards being able to manage that money stress and that trigger itself. So that's good. How do you what's some of the things that you think we would recommend? Wait, there was one more example that I wanted, because I know you heard about the surge pricing,
Right.
and we know it's for Uber. You said for airlines, there's certain different peak times when it comes to.
Why don't you? Because I didn't know until you brought it up. So why don't you define what is surge pricing or dynamic pricing?
So basically is, at certain times of the day, there's certain prices for the product service that we have. On peak times, it's a certain price, and it changes, when we have on off-peak or just lower hours of the day, there's pricing might be different. Different flights, especially we'll use Disney. Like during peak times, during the summertime where everybody wants to go, there's a price that you have for that. When it's off-peak, when not everybody wants to go, or just Floridians are going to the place, or Californians, depending on where you're at, you have off-peak, and the prices are different at that time. So that's kind of Uber is another one. Like if you're going during rush hour, Uber prices are going to be a certain number, and if you're going 3 a.m, it's going to be a different number when it comes to the ride price.
Yeah.
So here was a trigger for me. Wendy's was actually, part of their meetings they had proposed having surge prices on their fast food dining.
So
and
you
I
mean
was like,
a cheeseburger is going to be more expensive during lunchtime than it would be at 3 p.m?
I would say that's what was proposed, but that makes more sense. But it's really based off of, they said, volume and traffic. So they will make the determination. And then, of course, the board that's digital now will actually reflect a different price at that time. But yes, you could have lunchtime surges. But hey, what about if you're that 3 a.m, you're having that munchies at 3 a.m. because you're having a great time? You might actually have a higher price at that time as well.
Wow.
Yeah, that's a stressor, brother.
So we did look. That sounds more like a trigger to me than a stressor. But I looked it up. I did look it up on the internet to prepare, and because everything on the internet is true. Apparently, Wendy's has since backed off of that stance.
You. Okay, thank you. I would imagine there was probably enough backlash on the socials.
That's probably
that
what happened.
Probably said, "Are you crazy? Are you nuts, Wendy? How could you betray us like that?"
So when I typed in surge pricing on the internet, first thing that came up is Wendy's.
Of course,
and NPR posted, and I'm just going to read the headline, but NPR posted an article yesterday, so February 29, leap year day.
Yep.
No, Wendy's says it isn't planning to introduce surge pricing. There was another one on MSN. Wendy says no to surge pricing, but yes to AI. Here are the key takeaways. There was something else a day and a half ago on MSN on Market Watch that says, despite what Wendy's and Burger King say, surge pricing is the future of dining.
Oh, boy.
So apparently Burger King was kind of dipping its big toe in here as well.
Well, here's the thing. Once one of the companies starts thinking that this is a great idea, they're all gonna think. But I think for us, that trigger for me is like, here's another company trying to get more money from us as the consumer, and that's That for me is what worries me, and that stresses me out because it's like, my goodness, Wendy's used to be, for me, I think is the cheapest, because I feel like if it used to be fast food, you're like, oh, okay, it's not going to be that expensive, and I feel like it's a 5-course meal going to get a Big Mac nowadays.
So this is, I did click on one of the articles. It's a Yahoo Finance article.
We'll post it, right?
Yeah, I'll put the link. Wendy's says dynamic pricing is different from surge pricing.
Whatever that, okay.
But whatever it's called may still alienate customers. And it's funny, one of the things that this article points out, that the author points out, Cheryl Estrada. It's funny, Wendy's whole thing was, where's the beef? And now they're going to start surge pricing. There seems to be a joke in there somewhere.
All I'm saying is that was just another example that get people upset. And again, identifying those kind of things. But again, just another example of like, we are dealing with so many differences and changes in how we spend our money. And it's just, it can be stressful at times. That's all I'm saying.
From what I'm reading from this article, dynamic pricing is... It's not going to change. So dynamic pricing is, we're going to change the pricing based on demand, based on time of day, based on whatever. But it's not going to change day to day, hour to hour. In other words, if a cheeseburger is $1 normally, or whatever, $2 normally, I haven't bought a cheeseburger in forever, whatever.
Buddy.
Well, I'm thinking like McDonald's has the $1 menu, whatever.
It's $2 menu now.
Whatever. So, okay, let's say a cheeseburger is $5 at Wendy's.
Sure, thank you.
At noon. But there's more demand at noon.
Sure.
So at 4:00 in the afternoon, people are not quite having lunch. They're not quite yet to dinner yet.
Yeah.
There's not a bigger demand. So the pricing would be $4 at 4:00 in the afternoon. It'd be $5 peak time.
Yep.
It's always going to be $5 at peak time. It's always
I
going
see
to
what you
be
mean.
$4
Okay.
at non-peak
Gotcha.
time. It's not like we say, well, Tuesday peak, it's going to be $5. Wednesday peak,
Might
it's
be
going to be
$5.39.
right.
Gotcha.
So
Okay.
that's what it's still surge pricing.
It's still,
But
yeah.
I guess what they're saying is dynamic pricing is going to be more consistent.
Right.
It's not like Wendy's or any of these companies are going to change the price hour to hour, day to day.
Right.
It'll be here's the peak time price, here's the non-peak
There's
time
going to
price.
be
Period.
stock market changes as we go. Like, oh wait, go sell. Go get some hamburgers, buddy. Get some hamburgers right now because they're down to $2.
Oh, good Lord! I can see. We'll have
Anyway.
a money pit for fast food pricing. Buy, sell. We'll do short sales on cheeseburgers.
Love it.
It'll be awesome.
Well, how do we deal with the stressors? How do we manage, let's educate our folks here. How do we deal with our triggers? For me, identifying them is number one.
Yeah.
You've got to be able to understand what are the triggers that really get you stressed out. What's keeping you up at night? It's easy to say debt. It's easy to say, taxes, and those are the general, but each of us are going to be different in regards to knowing what those triggers are, and then trying to eliminate them is obviously it's easier said than done, but reducing those to be able to kind of like, okay, I know when this trigger happens, try to remove yourself from those situations if possible.
I think the easiest way to control the stressor is to understand it. To
educate
budget.
yourself. Good, yeah, gotcha.
And budget. Like I said, I got to the end of the month and I went, oh my gosh, where did all my money go? But then I realized, wait a minute, I had I had one unexpected expense that I was able to cover without dipping into savings. And then I had another intentional big expense to save myself from making that payment down the road.
Right.
So this month, I know I don't have that $200 payment for the table because I paid it off last month. So I can take that $200 and I can divert it to another debt and get that debt paid off faster. So I think budgeting and controlling your spending are a great way to
have a
to
plan.
overcome
Having
it.
a plan doesn't, and I know folks can get stressed about it, but having a plan really gives you the control that's necessary so that you can be intentional to you're happening to your money rather than the money happening to you.
Right.
And I think that's key as part of that. I love educate yourself. We're so, some of us are just, heads in the ground if I don't know about, or if I don't talk about it, that's a good thing.
Right.
I think educating about like what is the situation, how can we address those kind of things. There's plenty of information. Obviously, you're listening to this beautiful podcast, so we're trying to give you more information like that. But educating yourself so that you're not in the unknown also can remove that stress, because we don't like it when we're uncomfortable or we don't know what's happening. Eliminating that by educating will at least give you that, well, it's not about unknown now. It's more of like, game plan. What do I need to do? How do I handle it?
It's known.
Next? Yeah.
And I would say talk to people. If you have somebody that you can confide in, talk to them. If you happen to know, George, do you know a financial coach?
I think I have somebody, and I know a good bankruptcy lawyer as well, who's a really nice guy, and he's really nice at lunchtime too. But yes, all of those.
He's nice if you buy him lunch, which is a way to save money and get rid of my financial stress.
Dude,
buy me lunch.
Little things, man, little things. But yes, having someone you can confide in regards to that stress. But you need someone, again, that accountability. How do we, like, it's good to know and identify and complain and vent about the stress and the triggers, but what are we doing about it? How are we changing our mindset? How are we changing the habits so that these stressors become less and less in our future?
Yeah. And there's always the other method of, make more money or spend less money.
For me, mindful and financial decisions seem to be, you got to start making some adult decisions.
Right.
What is the need? What is the want? Identifying those kind of things. But at the end of the day, if there's a huge stressor about debt, why are we creating more? Right. If there's a huge stressor about how much we're making, how do we make more? If that's the case, like it's okay to know and really complain about those kind of things, but complaining about them are not action. You got to do something. What are we doing differently to actually make it happen?
Yeah, the old BMW. Have you heard that expression? Don't be a BMW.
What's a BMW?
Bitching, moaning, and whining.
Oh, boy. All right, there you go.
Do I have to put the explicit tag on the show now?
You might have to itself. The children are listening. What's wrong with you?
Don't be a BMW.
Yes, I love it, though.
Drive a BMW if you can afford it.
If you can afford it.
But don't be a BMW.
I love it. But yeah, I love that. Reach out, have some questions. There's plenty of social media groups and groups locally. There's networking partners if you're business partners.
There's girl math.
There's no girl math. We're gonna ignore you on that. But again, reach out to a financial coach, your financial advisors. You have your lawyers if you have good friends from that. Talk to family. I mean, a lot of times we stress about talking to family. I mean, there's other stressors in regards to talking to family, but it should be easy to have these conversations with our spouses, with our family members, to be able to go. Just really know that you're not alone in these kind of situations.
Definitely bring your spouse into the loop on this. I mean,
good idea.
I don't know how many divorces are caused by financial stress. I got to imagine it's a fairly high percentage.
Absolutely, and a lot of folks, I imagine when you talk to them when it comes to bankruptcy, and a lot of that stress is because they just haven't talked to each other about it. There's unknown, and
I talked to a husband and wife couple a week ago, 2 weeks ago. Talked to a husband and wife couple. They are separated. They're in the process of getting a divorce. They're living in the same house because they can't afford to live separately. Mm-hmm. And they're both being sued by different creditors. Oof. And so I've got to do something for one, and I've got to do something for the other. Right. I had to get them to sign a conflict of interest waiver so that I could represent both of them. And it's a big mess. Had they talked about it, it probably they might still be in the same scenario from a debt perspective, but I think their relationship would be in a different place.
Yeah, and I think you don't realize how much stress about money seems to be I think it's the top 3 that really cause of divorce. And I think that's where I think if you're going to change one thing about like your marriage and money, having those conversations is crucial. It's going to be hard in the beginning, but I think having them is a lot easier than having them when you're in the divorce proceedings.
One of the people I interviewed, Cassandra Smalley, you had something. Yeah. You had something going on that I don't think you were.
I don't think I was, but I remember that one.
So she talks about and in her book she talks about scheduling a money date. And how to do that with your spouse, how to do a money date with your spouse.
I love the idea. I always say just, have your 15-minute, conversations about your money each week. It allows you to kind of like, where are we? How are we doing? And what are we doing?
Yeah.
You know, that's kind of the same thing. But I love that money date. I mean, who's paying?
Yeah. I remember, well, you go Dutch. I remember I would get done with our monthly bills and I'd walk out of the back bedroom and I'd say to my wife, okay, you got like $10 to get you through the rest of the month. Enjoy, honey. And then
We're living in the lap of luxury, baby.
I had to start including her in terms of, well, this is why I pay this much to this bill. And this is why I chose to pay this much to that bill. And we talked about it, and it was fine.
Well, I mean, as long as I can pay my wife and do something for her, I have to start. That's the only problem I have is I got to still continue to, get her stuff.
Right.
And make her happy. So I'm learning, but, I do get reminded once in a while. Sweetie, date night. We got something to do. I'm like, yes, dear.
Well, I think maybe what I'm going to do is ask, our listeners to connect with us and let us know what are some of your stressors, what are some of your financial triggers. I don't want to know about other.
Well, I mean, if you have others, but as long as it goes back to money, I think we'll be okay there.
What are some of your financial triggers? What are some of your money stressors? And
how do you manage them?
How do you deal with it?
Yeah. What do you? I mean, you can be honest and be like, yeah, I do nothing, or I'm. But if you're meditating or exercise, a lot of folks, just any suggestions that we'd love to hear about them.
Yeah. So speaking of. This is not a financial stressor. This is actually a way to take financial stress off. And that is, if you are an attorney or title company, make sure you have the proper malpractice coverage where if something goes wrong, another money stressor could be getting sued. But if you are an attorney or title company and you do end up getting sued and you have malpractice insurance or E&O coverage, especially if it's through Attorneys First Insurance, you can know that Sam's got your back and will help you deal with that claim. So if you're an attorney or title company, reach out to our sponsor, our friend Sam Cohen with Attorneys First Insurance. It's Sam at Attorneys First, or if you want to give him a call, he will promise to answer on the first ring, and I challenge you to do that. One other way to get rid of some financial stress and get rid of some of those triggers is to donate. And one great place to donate would be the Crushing Debt Patreon page.
Keep us alive and well, and giving us opportunities to give you more interesting comment, and obviously the after pod where we just get to know us a little bit and continue the conversation a little bit more candid, but a little bit more free spirit in that conversation. But yes, support us there so we can give you more content and obviously continue to expand on the podcast.
Yeah, and all the money we get through the Patreon page goes back into the podcast. It doesn't go into our pockets at all.
Absolutely.
And then the last thing, we still got another month or two before we do the Purple Stride Walk to raise money for pancreatic cancer awareness. I'll put the link to My Legacy Striders. If you listened to last week's show, if you watched last week's Afterpod, and I think we might try to make that episode just in general, the Afterpod, more public. You saw all the logos we were looking at for the different. I still don't think I've decided on one yet, but I'm closer.
We're getting there.
So but if you want, it's My Legacy Striders with the PanCan organization, pancan.org, and I would appreciate that personally. Other than that, I think we are at the end of this week's episode. We're
at the end of the month. We're at the end. We're beginning
very
of the
beginning
new
of the
month
month
itself. But this is great.
We got through a long February.
Well, it was only an extra day. You'll be okay.
You heard that joke? How many months have 28 days in them?
How many?
All of them.
Oh, okay, Dad. All right, buddy.
So on that high note, I will end this week's episode of the Crushing Debt Podcast. We do hope that you have more money at the end of the month rather than month at the end of the money, and hopefully this week's episode helped to get rid of some of those financial stressors. If you need help, give either of us a buzz, and we will talk to you in next week's episode.